This is your final IRS warning. The massive COVID tax refund deadline is this Friday, July 10th. Individuals and businesses, claim your money now.
Paid late fees and penalties to the IRS. At the time, these charges seemed like an unavoidable consequence of filing or paying late during a global crisis. But a federal court recently looked at those penalties and reached a different conclusion. In the case of Kwong versus United States, the court ruled that the IRS actually lacked the legal authority to charge many of those pandemic-era fees in the first place. The federal government is now actively appealing that decision, fighting to keep the billions of dollars it collected during those years. This creates a complicated situation for individual taxpayers. To get your money back, you have to file official paperwork demanding a refund before the higher courts have even decided if you are legally entitled to one. The window to make that demand is closing. A hard deadline of July 10, 2026 is approaching, landing right in the middle of this unresolved legal battle. This timing is the core of the trap. Taxpayers who wait for the lawsuit to end before taking action will find that the window has already shut, causing them to forfeit their money permanently. To understand why the clock is ticking, we have to look at a broad legal rule. Whenever the federal government declares a national disaster, standard tax deadlines in the affected areas are legally postponed. The COVID-19 National Disaster Declaration was unprecedented in its duration, remaining active for 3.5 continuous years. Plaintiffs argued that because the emergency lasted 3.5 years, standard tax deadlines remained paused. The government finally ended the disaster on July 10, 2023. Under the ruling, every suspended deadline snapped forward to that point, creating a single consolidated due date. By synchronizing millions of individualized taxpayer deadlines to this one day in 2023, the court inadvertently set the stage for a massive, collective expiration date 3 years later. That expiration date is driven by the IRS's internal clock, a rule known as the statute of limitations on tax refunds. Under federal law, you have exactly 3 years from the date a return is filed to request a refund for overpaid penalties. When we apply that 3-year rule to our new timeline, the math becomes very simple. By taking the Kwong reset date of July 10, 2023, and adding 3 years, the calculation lands precisely on July 10, 2026. The IRS is letting this clock run. The statute of limitations does not pause just because the government is appealing the court's decision. It continues to tick toward the cutoff, regardless of what is happening in the courtroom. This creates a functional trap for the uninformed. Taxpayers who wait for a final verdict before filing their paperwork will find the door locked by a simple matter of arithmetic. To bypass this trap, tax professionals rely on a specific legal mechanism called a protective claim. A protective claim acts as an insurance policy. It freezes the statute of limitations clock for your specific account, preserving your right to a refund even if the appeal takes years to resolve. Your first step is to pull your tax account transcripts from 2019 through 2022. You are looking for any line items showing late filing, late payment, or estimated tax penalties assessed during the pandemic window. For individual taxpayers, the process is now digital. The IRS recently launched an online portal where you can electronically submit Form 843 to register your claim. Business entities, however, are excluded from this new portal. Corporations and partnerships must still file a paper Form 843 via certified mail to ensure they have proof of their filing date. It is important to remember that this form is not a guarantee. If the government wins its appeal, these claims will likely be denied across the board. Filing a claim only preserves your place in line. But for those who miss the July 10th deadline, the IRS gets to keep that money, regardless of how the court eventually rules.